Good morning, good afternoon. Thank you for joining us on this webinar on the topic of the next level of insights in shareholder engagement. So we'll actually just get underway in a short moment after a couple of housekeeping items. So for those of you that are joining us today live, you will notice in the bottom right-hand corner a Q&A button in blue. Please don't hesitate to click that at any point and submit questions. Where possible, we will try and answer them as we go through the presentation. But Josh and I will actually try and cap the presentation to about 30 minutes. We'll do our best. And then leave about 15 minutes at the end for some questions and answers. Don't hesitate to pepper us with questions. The last thing we want is some dead air. Throw anything and everything, including the kitchen sink, at us. Please don't hesitate. On that note, just to get us underway, I'll actually just throw it over to Josh for a quick intro of himself. Josh, over to you.
Hi, thanks, Amit. So I'm the VP of Editorial at Diligent, and many of you probably know Diligent for its sports products. I actually came into Diligent 2 years ago through an acquisition of Insightia, where I had been the editor-in-chief, really covering shareholder activism, ESG, corporate governance, all kinds of shareholder demands on public companies. So have been doing a lot of work with Diligent on its solution for investor relations and shareholder outreach.
Thanks, Josh. And a quick introduction of myself. So my name is Amit Sanghvi. I'm a global VP over here at Q4 of our capital markets platform business. I've been with the company for about 6 years, going on 6 years, but on the investor relations service provider side for 17 plus years. I will not bore you with the details of that journey. 17 plus years is a long time. We service customers on a full range of services in IR, and the capital markets platform takes care of a certain specific group of products within that. Without further ado, we're actually going to get underway with the presentation. Now, one thing that I will call out is when looking at the attendees for this, we've got a nice group, a mixture of people that have been in IR for a long time and with some good amount of experience, as well as what might be some new entrants into the IR space. So to begin with, I wanted to take us back a little bit to first principles when it comes to the topic of shareholder engagement. And then we'll quickly get into some of the meat of the topic today. But if we think about the first principles, in preparation for this presentation, I looked up a definition of engagement. And what pops up is the following, is that in a business or social context, engagement often refers to the act of grabbing someone's attention, arousing their curiosity, or sparking an interest or emotional involvement in something. And of course, that something in this case would be our company, the shares in our company and the value proposition of our company. But notice something here, that when we're thinking about engagement, the measure of engagement isn't necessarily the effort that we put in. Sometimes we think about how many meetings are we hosting in a month with new investors, existing investors, things like that. Actually, the measure, if you're really looking at trying to measure engagement, is how engaged is the person on the other side. So we'll hold on to that thought for a moment and come back to it shortly. And I mean, calling out the obvious in terms of why it is that we might try and engage someone, because when you do and you have a captive audience, then you have the opportunity to exchange information with them, receive feedback and learn, build a relationship, negotiate and persuade to, as the situation calls for, maybe towards your perspective if you aren't quite aligned on your thinking to begin with, and ultimately to motivate them. Motivate them in our context. You can think of it as, and there's numerous different ways in which you can capture this, but one way is to motivate them and ensure that there is a constant demand for our company's shares at the current price or higher, and from investors that are supportive of our execs and our strategy, so to speak. So if that's what we're sort of, in pursuit of, the effort is going into from a shareholder engagement point of view. Josh, maybe if I can hand it over to you for a second to specifically talk about shareholder engagement and the types of shareholder engagement.
Yeah, thank you, Amit. I think that's a really good setup, and I think it really keys up the key issue with it's two ways. You are wanting to engage your shareholders, and in many cases, they're wanting to engage you. So we put here some examples of the types of shareholder engagement or the key touch points, which are probably quite routine to you. But we know through Diligent and its board platform and the expansions and product additions that we've had to make over the years, just how demanding the increased engagement with shareholders is for the board of directors and by extension for the investor relations team. On the Insightio side, which is the market intelligence side of Diligent, we're very keenly aware of the demands that shareholders are making and the types of engagement that they're pushing for. That might be activist investors calling out company strategy, wanting to understand strategy better, all the way up to a proxy fight. It might be shareholder proposals, and certainly in the US, the increase in the number of shareholder proposals on ESG and anti-ESG topics has increased dramatically in recent years, and that requires engagement not just with the proponents, but with your other shareholders to understand how they're thinking about those issues, whether they're likely to support. There are plenty of other issues. Compensation, is one of those evergreen issues which sometimes increases in importance but never seems to decrease. We know that you have engagement, through the key proxy season, but also off cycle as well, around earnings and results, but just trying to understand how investors are changing their stewardship policies through the year. There's a ton of inbound activity. We know that you probably also have shareholders that you would like to know more about how they feel, and maybe for the sake of time, they don't give you as much engagement as you would like, or maybe they're keeping their cards close to their chest. Just on to what we kind of want to know about our shareholders and what we want to learn from them. I think it's very important to understand the histories of our shareholders. You may want to know, how do they vote, or do they have a history of activism? I'm sure that you see new investors that you've never heard of, small hedge funds, so on, coming up on your share register constantly, and trying to understand, who are they, what's their philosophy, what have they asked for in the past, how have they engaged? That's a key solution that we're trying to offer. I think it's also important to understand your place in the wider market. What's happening with your peer group? How are they engaging with shareholders? What issues are shareholders presenting at their annual meetings? And is that likely to be something that could come to your company next? And then how do you compare? How is your governance structure comparable to a peer in the same industry? How do you compare on ESG, and how are you likely to be viewed on your ESG strategy? Are you vulnerable to activism? And how does your compensation compare to other companies in your industry? There's a lot of disclosure on this, but not a lot of tools that make it simple to compare. I'll hand it back to you, Amit.
Thanks, Josh. When we're thinking about this, and as we now dive deep into the sort of specifics here, a couple of questions really come to mind. IR does an incredible job putting in effort to engage with shareholders. As you just saw, there's some examples of things that are maybe through digital communication, because you're sending out announcements, they're hitting the wire, being emailed out, or if it's through meetings or events that you're hosting, be it your earnings or results or your general meetings. The questions that really pop up, and when we think about the next level of engagement insights, are things like, are our efforts to engage with investors actually working? And how do we know that they're working? And then, when we get even more granular, what about us is sparking and sustaining the interest of the investment community? And today, Josh mentioned it also, there are certain things that you could do to know if your engagement is working. Remember, a reminder that when we're talking about engagement, it's not the effort that we're putting in, but that is the person on the other side actually captivated, and have we got their attention? There's only really a couple of tools that we have at our disposal to know that it's working and they are actually engaged. One is something along the lines of, I don't know, they take up a meeting or they're doing some research on you and they reach out and they want to speak to you. So something resonated in their research and they want to now connect, so they're engaged. They are focused on you. Or you ask for a meeting and they agree, and then after some time you might have a follow-up meeting. Or in the worst case scenario, you actually have no clue until they turn up on your share register, on your ownership list, and suddenly you've now got a new investor, or they've just sold shares or bought shares, and you've now, as a result, have a sense of a change in their perception of you. All of that makes me think of a bit of an analogy. For those that know me, I tend to think through analogies. Now, imagine you're on a date, and I should probably explain this image before I give you the analogy. I was trying to think through this analogy, and I was thinking, okay, well, if my daughter was to pick her two favorite characters, who would they be? And it would be Minnie Mouse and the Hulk, as it happens. And I got DALL-E to create this image to just help me kind of illustrate and get the point across. So now, imagine that you're on a date and you have this date, it's going great, and then all of a sudden you part ways at the end of the evening. Now, between that point, after that point, you have no idea if there is continued interest from the other person. You have no way to tell if there's any interest. What you get is that actually you're going to meet them at the altar. You've had the one date, and the next thing is that you're going to meet them at the altar and you're married. Does that sound a little bit crazy? Does it sound like it doesn't make sense what I'm saying? And yet, that's actually the reality that we live in from a shareholder engagement insights point of view. You have a meeting, and then there is dead air, and you have no idea about what's going on and if that person has got continued interest in your company and the conversations that you've had until maybe the next time you meet, or they just turn up as a shareholder. That's the equivalent that we're talking about over here, which is really just you wouldn't live with it. You wouldn't operate like that in a world where you're dating someone. Does it make sense in the capital markets? So let's what can we do about it? And here I want to introduce this concept of shift left. So shift left from the altar and have some interactions in between, like you would do in the real world. Can we tap into those interactions that actually occur in stealth mode, if you will, in the capital markets world? And what am I talking about here? So first of all, for those of you that aren't familiar with that concept of shift left, it comes from the software development world, where when you deploy code, instead of trying to detect problems after the code's been deployed, you try and look for the problems ahead of time so you don't have them afterwards. In a sales and marketing world, you almost try and do your research on a buyer ahead of time, try and reach them ahead of time so that when you're actually in the selling moment, they've already built up an understanding of your brand. So let's apply that to the capital markets for a moment. As I mentioned, IR puts in a ton of effort to communicate with the market. So one thing that IR is really good at is pumping out content, be it in the form of regulatory releases, media releases, events invites, and then the subsequent event itself. And if your company does it, things like newsletters, blogs, and infographics, whatever have you. When that content, digital content, is produced or hosted, in the case of things like an event, it hits a distribution platform and ends up on a website or a media platform or an exchange website, data platforms such as Bloomberg, FactSet, whatever have you. When that happens, there is a digital data exhaust that is created. So I'm going to use an example. What you're seeing over here is an excerpt from like an internal storyboard that we have at Q4. And it's telling the story of a fictional company called Ecom Inc. And in the center of this screen, that center panel, is the IR team of Ecom Inc. talking about some data that they're getting, this data exhaust. What I'm going through, is laying the foundations of the kind of the next level of engagement insights, as you'll see in a moment. And so on the outside of that center image, what you're seeing is the Ecom Inc. Website, IR website. And every individual on the outside represents some buy-side investor or a research analyst. And every time they go onto this website, they engage with some content on the website, on the Ecom Inc. IR website. There is a footprint that is left of their presence and who they are, what content they're consuming on the website, when they're even going there, how long they're spending on there. And you can start to pull and collate this information, as you'll see in a moment, and start to build a vivid profile of who is engaging with your content in between meetings. or maybe even, as has been the case already in some situations, when they're in the research phase of trying to assess your company, and they haven't even yet picked up the phone and decided to have a conversation with you. But if you knew that during this research phase, they've been on your website and you are in their focus, you have the option then to actually proactively reach out if you wanted to. And I'll go through some other examples. I'll hold on that and go through some other examples in a moment. But what this allows you to do is capture that information anytime there's an interaction with any of your digital content. And you can start to profile people through that engagement analytics, drive some actions, and walk into a meeting. So the drive some actions is kind of like the middle panel over here. But you can walk into meetings, direct meetings that you have, whether they be one-to-ones on a roadshow, or if it's a conference that you meet with someone, with a deeper understanding of the audience that you're speaking to, and whether or not they've already taken an interest in your company. Or if this is the second time that you're meeting with them, if there's been sustained interest from them in that time, and what specifically they've been engaging, what type of content of yours they've been engaging with. So if that sounds fictional, let me now put that into context a little bit, because it's not. This is now the next level of engagement analytics that is actually available to you. So what you're seeing is a kind of an anonymized version of some data that actually is available today for this dummy demo company. And JP Morgan represents an institution that's been engaging with the digital content of this dummy company. And if you look at the right-hand side for a moment, or even actually if you look at on the left-hand side, you'll notice under the JP Morgan title, it says overview, and under overview, if you go a little bit further down, it's got some engagements. And you'll see email alerts opened and events attended. So now what we're saying is for this particular company, they can see that JP Morgan, since December, mid-December 2022, has been engaging in a ton of their digital content, both their events and their email alerts. But actually, you can go even one step deeper. You look on the right-hand side, and you can see things like who is the specific individual that's been attending the events, in this case, Rafael Zingon, and the fact that Rafael has been opening up a ton of emails. Interesting, not least because Rafael hasn't been picked up as a shareholder in this company. So who is Rafael and what's their interest? So you can start to dive a bit deeper. Stuff that really otherwise, until recently, wasn't possible. And by the way, I say that it's been possible in other industries. It's just in our industry, it's not been possible until very recently. So we're catching up in many ways. But there's other types of insights that you can get. So from JP Morgan, in this scenario where they've been going to the website, you can actually see the pages that they're viewing, and you can see that there's some heightened interest in the new ESG report, for example, with a number of unique visitors and downloads. And then finally, you can actually go, and I'll give you a real example in a second, you can actually go to the extent of even tracking activist investors. I would argue this is probably now the earliest indicator that you can get of activist interest in a company before the activist actually makes themselves known, or there's a news story that's even picked up. So now you can do things like, in this scenario, you can see there's two different types of activists: an occasional activist like Millennium, but then notable activists that have live active campaigns such as Jana and Starboard. And so you can pick up on this and you can click into them and get the same types of insights as we just saw for JP Morgan on any one of these. So I'm going to give you a really quick example here, and then I'm going to throw it over to Josh in a moment. But so this is relatively recent, as I mentioned, this type of data that's now available to companies. In the not too distant past, we've had several scenarios now where we have actually picked up on an activist, a notable activist. And in one specific scenario, we saw this notable activist go on the board page of a specific board member, on the web page of a specific board member on the IR website. And we were able to inform that particular customer. And it was interesting because they've neither seen this activist investor in their stock, so not shown up through surveillance or anything like that, nor has there been any direct communication or engagement with that activist, nor has there been any news of that activist talking about them. So truly a really early indication of engagement, somebody that is a captive audience and focused on your company and doing some research. So Josh, why don't I maybe kind of throw it over to you at this point as to, well, once you have this kind of data, how much deeper can we actually get to know investors like this?
Yeah, absolutely. Thanks, Amit. And I think this is where the beauty of the partnership really comes in, it's incredibly useful to have Q4 tracking your shareholders and pre-shareholders, if you like, those showing interest before they invest. And when you know that someone's interested, you probably want to know a little bit more about them, to pick up on Amit's dating analogy. So, where we would come in is to give you an example of an investor profile, particularly one that is primarily an institutional investor with a stewardship team. I've used JP Morgan as well. Uh, we would have a profile of that investor with their voting policies, and they would have multiple voting policies depending on the regions they operate in, their key personnel, their voting history. You see that we've broken it out by proposal type. So, you can look at how they vote on boards of directors, what's their policy on overboarding, how likely are they to support an activist campaign that mentions certain governance issues, how likely are they to vote for an activist in a proxy contest. Also on the ESG topics, are they supportive of environmental and social shareholder proposals? What kinds? How does that correlate to certain investors that put forward these proposals? You can also drill down and look at their voting by sector, by region, because you want a good peer comparison if you're planning or trying to anticipate whether this investor will raise any issues um, with your company, and by fund level as well, because we know that these asset managers are getting larger and larger. They have multiple funds under management. Some may be actively managed, and the portfolio manager may have a little bit more discretion, and others may be indexed, and the stewardship team takes precedence over the voting decisions. So, we have a huge granularity of detail. We also have some news on it, individual investors, to really help you understand, who are the key players at this fund or asset manager, and how do they think and operate. And the same is very much true for an activist investor. I've picked one that maybe isn't as much of a household name as a Janner or a Starboard. I'm sure when you see those names crop up on your Q4 report or your shareholder register, you rush to alert the general secretary or the CEO even. But there are many, many activists out there. In fact, it's becoming increasingly common for hedge funds with limited to no history of activism to engage very experienced advisors and to run campaigns that are equivalent to a Janner or a Starboard in their professionalism and their complexity. And this profile system enables you to delve deep into their philosophy, their engagement style, and ultimately to assess whether that investor is a potential risk. So you may come across someone who has called for capital allocation changes or called for board changes publicly. They may not be the kind of activist that regularly goes to a proxy fight, or they may be someone that you've never heard of, but actually they've run a couple of proxy fights under the radar and are starting to become a more established, more activist name, because lots of hedge funds do shift strategy. So again, we're tracking these investors' activities comprehensively around the world. We're writing news and producing lots of analytics on how they've engaged with companies, and I think it's a great way to understand, what they're thinking about, who are they invested in, what are their track records, and to start to plan and wargame for potential engagement, both with this shareholder and for your wider shareholder base, in case you need to shore up your defenses against a potential proxy fight. So hopefully that kind of context on insight here and diligence capabilities gives you a sense of why these three key steps are important. So understanding stakeholder behavior, understanding what you're up against, what you're likely to have to deal with, and how you can mitigate the potential impacts of a disruptive campaign. Both the activists, the institutional investors who are going to be voting, and with the proxy advisors who are going to be weighing in on these decisions. Benchmarking your governance, that could be your bylaws, corporate articles of association. It could be your board of directors, your compensation structure and comparisons with peers, and your ESG as well. I think we have a wide set of solutions for those topics. And then really monitoring the market, understanding what news and media feedback there is on your company's strategy. In addition to the news and insights here, we have a news tracking software called Manzama, which we work very closely with, that flags up how your company is being portrayed on topics such as ESG, M&A, financial and non-financial topics. So you can really stay on top of how you're perceived in the market. And just to illustrate, I won't go through each agenda item, but we have this comprehensive set of data that can enable you to understand the shareholder market better, but also to understand yourself and how you compare to your peers, that allows you to get on the front foot and head off any particular campaigns or negative events. So back to you, Amit.
Thanks, Josh. And I won't go through surveillance specifically here. What I might actually try and do is, if I skip across towards this sort of final slide that's going to summarize a couple of things for you. What we've tried to convey today is there's a deeper level of insight that should now be available as members of the issuer community. There is, I think, an opportunity for you now, with the availability of data, the advances in technology, to hold those that are responsible for supporting you in the capital markets to higher expectations. And I said that, some of this data that we've talked about today has been available for a long time in other industries. Often when I talk about this, I use examples of things like Amazon and how they're able to get data on their marketplace and use that to drive better and more fruitful connections between buyers and sellers. So there were a couple of questions that came up, and I'll kind of make this final comment and start to address those questions, and please feel free to put more in. But here's the thing. With a deeper level of insight, you can actually start to get more advanced analytics on who's engaging with your content, as we were saying before. But actually, it can transform things like your ability also to stay informed in between what is traditionally, your 13F updates or your surveillance. And I'll use one last example to summarize all of this. Right before the last 13F deadline, the most recent one that went, we had a couple of clients that were hyper-focused on any kind of hedge funds that were engaging with their stock. And what we were able to see actually was, through engagement analytics, a handful of hedge funds specifically that were engaging with the website and the events of a particular company. And at the same time, the surveillance team was talking to that particular client and saying, hey, we're seeing the sorts of volume and patterns of trade that indicate hedge fund money flowing out and new hedge fund money flowing in. But for the first time, they were able to go one step further and say, here are the names that we think it could be that are flowing in. Because flowing out is always the easier part. If you already know someone who's holding, you can say they're the ones that are probably flowing out. Flowing in is always harder. But now they were able to use this engagement analytics data to say, we think it could be these hedge funds, because they seem to be tracking your website right now, or opening your email alerts. So they gave that kind of heads up. Made an attempt at sort of saying how many shares those inbound hedge funds could be holding. Then the 13F deadline came and went, and lo and behold, one of those hedge funds picked up a substantial number of shares. That is transformational, in my opinion, not speaking specifically to Q4 or Diligent or our products and services. I'm just speaking specifically to the evolution that probably needed to occur in this industry because of the way that we've had to operate. And I used that example of dating before, rather a crude example. But the ability to have knowledge and touch points in between to inform you of what's going on, the interest in your company, has not been there, that level of transparency. So this has the ability to transform it. So now I'll answer the two questions that have come in so far, because I think they relate specifically to the technical hows. So thank you, Karim and Cindy, for these questions. To the question number one was, how do you manage? I'll read out both because they sort of are interrelated. How do you manage the perception that you are creeping your investors? Was the first question. Thank you. It's a good one. Often privacy-related questions come up on topics like this. And then the second one is, in order to identify who is looking at your digital content, it would mean that you kind of need to track and map them through something like an IP address. So the question was, is that how it works, and how do you go about it? So I'll answer both those questions together. First of all, the who part, because then we can talk about the creep once we establish how the who works. There's multiple ways. There's the one straightforward way, if you will, or the simple way, which is through IP address tracking. But as you can imagine, in today's day and age, it's not the most reliable way. You can, to a degree, depend on it, but with COVID, and this is nothing new, we've gone into a much more of a work from home environment. So how do I know that this IP address belongs to a specific company when it's actually their home IP address? We also have the WeWork equivalent of co-working spaces. How do I know this IP address belongs to a specific company and not the 5 other companies that are on the same floor? So IP addresses work to an extent, and there are ways, and you can isolate. But really what you have to do, and what we've chosen to do, is recognize that we have a privileged position in the capital markets as Q4, because we've got this mass of client base that have websites on our platform, well over 2,000, and a huge number of companies that do earnings events with us on a quarterly basis. In those moments, we're able to offer, we're driving 16 million hits from the investment community across this portfolio of websites and events. In those moments, we're able to actually do a value exchange with investors. Investors, for example, have to sign up to multiple events, and it's a bit of a pain for them having to do that over and over again. So what we say is, hey, we would love for you to actually sign up and not have to re-sign up for every event. In exchange for that, would you be willing to just make yourself known? Because we'd like to drive better connections. So we do it in a very open and transparent way. And what we found is that so far we've driven hundreds of thousands of registrations from investors. So that's how we get down to the who. And I won't go into too much more detail, just in the interest of time than that. Happy to connect offline on this. But that's sort of the how, and we get where there is a complete blind spot, we're starting to really open up the visibility and transparency there. But we do couple it with the IP address mapping, where we have high confidence of that being good. So the creep factor. There's so many different ways in which to answer this. Number one, you better believe that the buy side employs tactics like this all the time. They have big data, alternative data. They're doing things to track things on companies. And they're used to it to a degree. Cookies and all that sort of stuff. They're not. It's not new to them. So that's the one. The two is, as I mentioned before, how we actually get down to the individual level is we allow them to opt in. We allow them to be a part of the community, and we allow them access to the companies that we work with. Not allow them is the wrong word. We're not a gatekeeper, but we make it easier for them to connect. And to our surprise, they've been wanting to do that. They've been wanting to make that connection happen. So I would argue that the creep factor doesn't exist because of our approach to doing this. And actually, it's been welcomed, from what I can tell so far. For the most part, it's been welcomed as an attempt to drive better, more efficient and effective, timely connections between the right two parties of a marketplace, essentially. Okay, so with that, we will draw. Josh, I don't know if on this you wanted to add anything else on this kind of final point over here from a diligence standpoint.
I think I just want to say, like, what I appreciate about the partnership so much is that there is no correct order in which to use these different tools. You could very much be tracking the market generally through diligence tools, or you could be starting off with Q4's surveillance tools. But then they are layered and kind of contiguous in the sense that you can use one to supplement the other and really build up your engagement strategy from a very well-informed base. And different at different stages and to different levels of activity. You might have a very simple engagement process, for your regular annual meetings, but inevitably there are periods when you get unwillingly sucked into something of a firestorm and you need to ramp up the engagement and understanding of your shareholders. And this allows you a very quick way of doing that, that doesn't rely on time-intensive meetings and detailed notes and interactions with those shareholders, which is just something that unfortunately is not available to many companies. So, it's a great partnership. The logic of it, I think, is incredibly obvious to me, and I'm very happy to be invited along to share this webinar with you.
Thanks, Josh. I appreciate that, and I will pay a nod back to the partnership in just a moment, because there's so much that makes sense and so much of a synergy. Just as you were speaking there, we also had one more question come in follow up, which is centered around this notion of how many so if investors are opting in, how many activists have opted in to be tracked. It's I don't have the exact number, and again, happy to follow up afterwards to give some context. But I can tell you we've got a healthy healthy coverage of the Shark Watch Top 50, for example. And so if that's anything to go by, going from, I guess, zero visibility to a good volume of the Shark Watch Top 50, what I'm hesitant on saying, because I'm not 100% sure, is what that coverage looks like across the Shark Watch Top 100, for instance. But happy to follow up after this and give you some insights on that. So we can do that.
If it gives you any comfort, Cindy, the activist investors, and particularly the more established names, the bigger ones and so on, have become much happier to engage behind the scenes and work towards solutions that don't require a surprise attack and a public fight. There is a return against brain damage calculation that a lot of activists go through, and they don't want a proxy fight any more than you do in some cases. But they do want to get to a solution that works for them and their investors. So, I think activists are willing to have conversations at an earlier stage these days, and are increasingly obliged to in order to demonstrate to institutional investors and proxy advisors that they have attempted to reach an amenable agreement or a settlement. So there are lots of opportunities to work with an activist before it becomes a public fight. And I think this is, a way in which you can head off some of those questions or concerns while the activist is still formulating a thesis and a view of your company.
I think that actually it's a really good point, and I love the visual of the return brain damage. Made me think of Rocky Balboa, but I think it makes a lot of sense and kind of ties into why we haven't seen or maybe put it another way, why we've seen the adoption that we have from even activist investors with the engagement analytics sort of data and insights, because it's not quite as maybe normal anymore for it to be undercover. Maybe it is to a degree until they're prepared and ready, but I think they're more willing to be known and engage and have a conversation, as you said, not necessarily publicly. And that may be the ultimate reason why, because I think it's hard for me to sit here and tell you exactly why they're willing to be known and seen. It's hard for me to speak on their behalf. All I can say is that we do see it though, and they're taking up the option to be seen and visible. So, which is interesting in itself. Okay, so with that, and if there are no questions, I mean, we've only got a few more minutes left. Actually, Josh, I have to congratulate us because we did a pretty good job of keeping on time. Thank you, Josh, and to Diligent, both for the partnership on the webinar today, but also, in choosing the partners that we work with. We want to find people. Our mission ultimately is to empower and make sure that the IR teams out there have everything at their disposal that they need to do their job to the utmost degree of quality possible. And Diligent is a company that we see that can help us with that same mission in making sure that the IROs have everything at their disposal. So thank you so much for the partnership and on the webinar today. Thank you everyone in the audience for attending. There will be a playback of this available in due course. And please do watch out for future sessions that we host. Don't hesitate to reach out to Josh and I on LinkedIn, or if you have our direct contact details, happy to take any questions after the fact as well. Thank you again, everyone.